Welcome to Local Leverage, your competitive edge in business. As always, today's show is brought to you by Property Radar, the hyper-local lead generation platform for small local businesses. Today, we're joined by Daniel Iskander, co-founder of West Capital Lending, one of the fastest-growing independent mortgage brokerages in the country. Since launching in 2021, Daniel's helped West Cap become a powerhouse in the non-delegated correspondent space. And last month alone, his team funded nearly 2,800 units for over $640 million in volume. And they're doing it in one of the toughest markets we've seen in over a decade. On today's episode, we're breaking down what's driving that momentum, from leadership to loan strategy to team culture, and how Danny's built a brokerage that's not only surviving, but scaling aggressively in a high-rate environment. If you're serious about competing at a high level in the mortgage space, you're going to want to hear this. Let's jump right in. Danny, welcome to Local Leverage. It's a pleasure to have you on today.
Pleasure to be on. Thank you, Mark. Thanks for having me.
Yeah, no, this has been great. As always, I want to dig in to what you all are doing, where you're seeing success, and hopefully provide some learning and actionable steps for our audience. So let's dig right in. There's been headwinds for sure, but yet I know you guys are crushing it. What are the loan products that have been working best kind of over the last maybe 30 days or last quarter? Are there any standouts in terms of borrower demand or areas of traction?
Yeah, I think, well, first off, West Capital Lending, we're a mortgage broker. We have, 162 different lenders that we engage with and work with their product set. The thing that really stands out right now is home equity. So, obviously we're still in a great position, probably the highest home equity that we've seen ever. And so we've been doing significant amount of home equity products, including home equity lines of credit, home equity loans, still cash out refi. But I would say out of our roughly 3,000 funded loans per month right now, nearly 50% of it is home equity products.
Wow, significant. Okay. What do you think's going on? I mean, there's obviously market tensions and uncertainty and things like that, but what do you think is driving that? Is it just the market, or is there more at play that we should be thinking about?
It's a complicated environment, right? There's so many different things at play. We're now 3.5 years with elevated rates. Property values continue to go higher and higher. We're starting to see inventory change. So, there's just significant amount of things that are happening, but regardless, our mindset is that there's always going to be a need, and figuring out what that need is for your client and identifying that, and then having the right product and the right advice to be able to help them out. So I know that mortgage in general is, a lot of companies are struggling right now. We're breaking every record that we've ever had.
That's awesome.
Units, volume, onboarded, newly recruited loan officers. We're almost at 1,000 loan officers now. So, whatever the challenges or adversity that the market is giving us, we're taking it head on, and we're still having a lot of success. So
that's fantastic. And I think, I know that you're one not to just focus on the pure number of agents that you have, but rather the productivity of those folks. And you guys are doing a lot of volume for 1,000 agents.
Well, I think number one, attracting the right agents. There's been nearly 300,000 loan officers that have left the market. So, I think the most recent stat that I've heard is about 90,000 active loan officers. So we're now about 1%. We have about 950 loan officers. But again, we're not trying to just get to a number, right? There's companies that just focus on number of loan officers, and yet their average funding per loan officer is less than one, right? So we're nearly 4 to 5x the average funding per loan officer, and that's really what we focus on, is onboarding the right people, making sure that they're coming to us with the right pedigree, background, and that they're here to learn and implement a strategy that we've developed. We call it our West Cap playbook, and make sure that they're willing to implement that strategy and and work, right? There's a lot of loan officers that are sitting on the sidelines. So I don't want to be too long-winded about it, but I think it's
No, that's great.
the right people, the right strategy, the right culture, all of that combined is really what's going to lead to, the type of numbers that we like to see from a loan officer, which is still funding, 4 to 5 units a month or more.
Yeah, no, I actually like to go a little deeper with that if it's okay. I mean, I'm curious, as you're recruiting, hiring folks that they have the track record, they understand the business, and yet you're bringing them into your organization and saying, that's all well and good. We know you've got the raw talent and the ethic, but we want you to follow our playbook. How does that go down? I mean, how do you navigate that? Because oftentimes people that are really experienced, they want to run their own motion because they've maybe had success with it in the past. How have you been able to get people to come in and adopt your playbook and follow that process?
Well, I think a lot of people see Westcap and they see the numbers that we're producing, and then they're looking at, we have a daily leaderboard. We have a kind of a system that shows all the loan officers' numbers, their fundings, how many leads they bought, or how many licenses that they're in, what their marketing spend is. So rather than being kind of a big broker where everyone's on an island, we try to share and collaborate as much information as possible, similar to kind of a consumer direct type of mentality, but all kind of independent. And so what I think is that when someone comes into our organization, they hear about these top producers, right? Guys that are funding 50, 60 loans in today's market, and then they have a kind of a lens into exactly what that loan officer is doing. What messaging are they sending out? What leads are they buying? What states are they converting? What is the return on their ad spend in those states, right? All of that is measured. We've invested in a data team to be able to analyze really every aspect of our leads, our conversion, and our data. And by displaying that in an open forum to others, they come in and even they might say, I have all the experience in the world, I know what I'm doing, and yet they're funding 3 loans a month while someone is funding 60 loans a month, right? They're going to probably figure out, what my strategy isn't maybe the best strategy, and I should be doing what this guy's doing. And so that type of mentality of, following, what the most successful person is doing is always what I've done in my career. And I think that that's really the mentality of most of the people that are joining us. Now, we promote a diversified strategy, right? We have people that do social media. We have 2 of our largest social media influencers out there with Min and Jade. And we have a direct mail strategy, and we have a referral-based strategy and purchase and relationships. But I would say our primary strategy is aggregate leads, working those leads with our playbook. And I would say that is what most agents are going to be attracted to by coming to Westcap.
Yeah, no, I've seen that across many different sales orgs that I've run. I mean, people obviously want to know what the best people are doing and how they can leverage the same tactics or skills. I'm curious, everybody's got a different perspective on this, but I know you put a lot of time and effort into the development of these playbooks and probably the ongoing tweaking and management of them. How much latitude do you allow people to deviate from the playbook, or do you at all?
Yeah, I think, first off, we have a lot of flexibility. Being a loan officer, right, you have your own personal brand. You have creativity on what you want to message and what products and what type of clientele you're looking for, whether it's purchase, refinance, govy loans, home equity. So I think you have to allow people to kind of be their own. And so we'll show them what our primary messaging and strategy and what leads and what is converting, but then we allow them to make selections. We have a lead store, and that lead store has purchase, rate and term, home equity, and then it's got about 60 different vendors that we buy leads from a centralized location. And then based on what they're wanting to buy, what they're wanting to engage in, is what their messaging is going to then, is going to dictate what messaging they're wanting to create. So as long as it's compliant, and they're following the basic rules that we kind of set out from our compliance team, then we allow them the creativity to be able to come up with their own messaging above and beyond outside of our traditional playbook.
That's cool. I like that. That's nice flexibility. Is there a point when maybe even by process or otherwise that you step in? Like, is there a point at which you're like, okay, we have a playbook, you're running your own motions, it's not at the level that maybe we want, and therefore you've got two options: either go find somewhere else to be successful, or start utilizing our plays. I mean, what's that process like?
No, we don't have any minimums. There's no minimum expectation on units, fundings, requirements. If someone is not successful and they're, we've advised them on what strategy they should do, that's up to them, right? At the end of the day, it's an independent business model, and whether they're funding one loan or 10 loans, but the majority of people are going to see who's successful, what their strategy is, what their messaging, what their approach is, and they're either going to adopt to that, and if they don't, right, they might not work here. They might just decide to, that this is not working for them. So that's okay.
Sounds like, absolutely. And it sounds like you're doing this, mainly carrot, little stick, in terms of how you're motivating people, and it seems to be working. Obviously, it's working because your throughput per individual is very high. So that's really great. Let me jump back to your comments around kind of the equity products, and the fact that those are moving. I understand you have a lead story. You got all these different sources of leads. How are you helping your folks to refine and improve their messaging related to this? Like, what is the nuance in that, and how do you guide or workshop with your team to make sure that their messaging is the most effective that it can be?
So we have, I think there's two parts to that. Number one is we will analyze our return on marketing or return on ad spend based on the lead type and the product, and we'll have a baseline level of what the performance should be. And then we'll analyze what our top producers are doing. And then that's where our training team will outline who are the top producers, who's outperforming the return on ad spend. And then we have, all of our corporate CRM account is kind of governed by us. And so we have a lens into what is our top 10 loan officers. What are they messaging on day one, right? What is the content? What are they sharing with the client? How are they overcoming objections? When are they sending their application link? When are they, whatever it may be. And so we'll analyze that, and then, we'll then take that and then share that with the group.
That's great. That's
so we're
great.
constantly kind of tweaking the, the messaging and training for new people based off of what's currently working now, and that we can kind of point to as our North Star or whatever. Look what this person's doing. Here's their messaging. You should follow this.
I mean, there's a couple takeaways in that for me. I mean, one is, just being really thoughtful about all of the different data points that you can capture, because all of those things you mentioned, like you've got to be intentional about capturing that information along the way so that you can ultimately go back and analyze it. And then the second takeaway is, double down, do the analysis, make sure you understand what's working and what's not working, and continually iterate on that. I'm assuming that that's been an evolution for you. I mean, it just doesn't happen just right out of the gates. What's involved in that process? I mean, how many folks do you have, or what's the team like that is responsible for that data gathering and data analysis?
We have about 4 people that's part of our data team, and then we have 4 people within training. So there's about 8 people that are involved in that overall.
Wow. Are you all starting to utilize AI in this? It feels like the analysis is just begging for some AI application to evaluate what people are saying and their inflection and all the rest.
I can't tell you how many demos I've done, and we've tested it out with probably 10 different agents. I just still think, I'd be lying to you if I told you that we're utilizing it in a big way. We're not, right? We're still kind of in testing and just beta.
Yeah.
But
Yeah.
I think that it will. I think probably in the next 6 to 12 months, like absolutely, right? There's no doubt about it that the power of AI and then obviously just with companies like you, like data companies, and the ability to have focus in on so many different areas and on what data you're trying to attract and what you're trying to go after, and then leveraging AI to be able to mine through it, right?
Yeah, absolutely.
It's just it's a powerful combination. There's no doubt about it.
Yeah, I mean, I think you're on the right track. I mean, the fact that you're gathering the information in a thoughtful and methodical way is much of the battle. I mean, it's kind of that garbage in, garbage out thing. If you don't have a consistent and thoughtful way of gathering information, then your output's only going to be so good. So, yeah. I'm curious, beyond the data that you're monitoring internally, which is all of the activities and actions and communication that an LO is having with their customer. What else are you relying on in the way of data to maybe help inform your agents on who they're speaking with and the types of underlying issues or opportunities that exist? And how are you, I guess the question is, how are you marrying maybe third-party data with the data that you're acquiring directly? Are you getting data from outside? I mean, you're obviously gathering data from the process itself, the engagement with the consumer from your LOs. Is there other data that you're bringing in to either help shape their messaging or help shape their understanding of the consumer that they're working with?
Well, I guess let me just share some of our numbers, and that might kind of help out. So the amount of organic data that we bring in is probably less than 3%. Okay, so we are a big buyer of aggregate leads from multiple different sources, right? Last month we spent 3.2 million on aggregate leads, and from all these different sources. And so, we're not generating our own data and analyzing the conversion and whatnot of our own data. We're primarily buying that lead information, right? Clients that apply for a purchase or refinance, a home equity, debt consolidation, home improvement, whatever it may be, from aggregators. And then we're monitoring the performance of that based off of lead conversion, lead to application, application to submission, submission to closing, and then every milestone essentially in between, with the final thing being return on ad spend, right? And ensuring that, and I think we probably have one of the highest return on ad spends in the industry that I know of, compared to any of the companies that I've analyzed. We get about a 4.25% return on ad spend across the board on most of our aggregate leads. And then we're constantly analyzing, if a provider isn't holding up to their end of the bargain, it's not meeting the expectation of a conversion standpoint, right? Then we have, Tableau reporting, and we analyze that, and we're pushing back on that provider, to, reduce the price, or that it's not working in the conversion, and they're going to get, that we have to end the relationship. So I think that in general is a huge value add to Westcap overall, is that this business intelligence and data team is doing their best to protect the loan officer's profitability and ensuring that, if they're outside of our ecosystem and they're just buying leads from a provider, are they kind of just shoveled a bunch of garbage, right?
Exactly.
Or or is this actually performing at scale, and that we can document the performance through hundreds of loan officers and thousands of leads, and have a validation process that what we're buying is a quality lead.
Yeah, absolutely. So I'm curious, as you look at that ROAS, it's an impressive ROAS, and I'm assuming that there's a spectrum, of good to bad quality leads. But how much of the ROAS would you say is really driven by the fact that you have great people, great process? I mean, it's really the handling of the lead versus the quality of the lead coming in. I mean, I know that's hard to put a number on.
I think it's a combination of both. I mean, you have to have quality agents. You have to have a very good engagement strategy that is proven and trained out properly. And then we have to hold the lead vendor accountable. And so if they know that we're a big buyer, right? I think we spent 1.6 million last month with LendingTree, right? LendingTree is going to take us seriously, right?
Yeah.
They're going to know that we're a big buyer and that they have to ensure our success. It's a partnership, right? They're not, they can't continue to just send us bad leads, bad data, and think that they're going to continue to get away with it, right?
Yeah, sure.
So
Yeah.
So yeah, I think it's just a combination of those three: quality agents, a good engagement strategy and process, and then working with vendors that understand the value of the relationship and ensuring that they care about it. Doesn't, if they just rely on us to kind of be the squeaky wheel that's going to just, voice to them, hey, we have a problem with XYZ campaign, the relationships we've developed is that they're getting in front of us and then say, hey, we have an opportunity here, or hey, we're seeing X, Y, and Z. Would you like to make these changes? And so that kind of a dynamic relationship is very, very valuable, in my opinion.
Yeah, no, absolutely. Yeah, I mean, it's a two-way street, so I agree with you wholeheartedly. I'm going to shift gears just a little bit because it has been a challenging few years, but most recently, I mean, we just have a lot of headwinds. You guys are still performing really well and setting records in the midst of it. What do you see as kind of the biggest challenges for loan officers or independents, in 2025?
I think the biggest thing is just changing your mindset. The mindset in 2021, through COVID, rates are low. Just the opportunity was it was just a very easy. And now you have to work, right?
Yeah.
You have to put it in good, honest, a typical loan officer day is not, a 9 to 5, right? It's, you're putting in the work, the hustle, the grind. You have to refine your messaging and your process. And, in our model, you kind of have three jobs. You're the prospector, you're the marketer, and you're the loan officer, right?
Yeah.
Now you're going to earn the majority of the commission, right? But you have those three jobs and you need to do those jobs pretty relatively well. And so I just think that that's the biggest difference in today's market. It's eliminated so many people that just came in because they heard mortgage is easy money. All you need to do is get a license and you can make 20 grand a month, 50 grand a month. There's, whatever it may be. And it was relatively easy for big companies to scale up. I know large consumer direct lenders that every 6 weeks they were onboarding 80 to 100 loan officers that had, no mortgage experience whatsoever. They would teach them, train them, get them licensed, and then put them on the floor, and they would do relatively well. In today's market, there's no chance that they're going to have that type of ability to be able to do that and the success rate of that loan officer. You have seasoned pros that have been in the business for 20 years that are tapping out and saying, I can't do this anymore. It's too hard.
Yep.
It's not profitable enough. It's, all these various headwinds. And so I think it's really thinned out the herd and created an environment where the best of the best are really, really excelling and winning in a big way. And then, so long answer to your question.
No, it's fantastic. I mean, it generates all sorts of additional follow-ups for me. But I mean, I guess, if you look at those folks that are the best of the best, the kind of the killers in your space, and I know you've had some that are doing, huge numbers each month. Are those folks casting a broad net in terms of their specialization? Are they niching down and being really specialized in one particular loan product or one particular customer segment? I'm just curious, what are these best of the best doing besides being a great marketer and bringing the right mentality and hustle? What else is going on there?
Well, I think if you analyze, let's say, our top 25 loan officers, I would say that you know, for our segment of the business, I'm kind of a refinance guy, right? I've been a consumer direct primary focus in refi for my entire career. And I would say that our top 10 people really focus on refi and home equity and lead conversion, and they stick to that primary kind of lane. If it is something that is completely off the beaten path, and you know, I mean, we do commercial, we do a lot of different types of loans, but I would say the highest producers really kind of figure out their niche and they stick to it, and then they're just doing it over and over and over again, and it's like clockwork. Our top loan officer funded 64 loans last month, right? One guy,
Awesome.
64 loans, Rami Abbas, and it's just awesome to see someone like that he's just got a systematic process and how he approaches data, how he engages with that data, how he leverages his team, a couple people to be able to assist him with that. And he doesn't deviate from the plan. So
I am a big proponent of that. I talk about this quite often on this show. I mean, I think I talk to a lot of LOs and many that have been in it for many years, right? And we got folks with 20, 30 years experience, and yet they're still trying to be everything to everyone. And it's distracting. And it's like, I mean, one, your message to your customer is then weakened because you're not able to really hone in on their specific issues in the way that you could if you were like Rami. I love that message. And I think that if people take that to heart, it'll serve them well. I mean, you don't have to be everything to anybody. You can create a niche. You can run a play consistently and tailor your offering in a way that you can't if you're just doing everything. Yeah.
We have 162 lenders, but I would say there's about 9 that are primarily used. And I would say our top producers use really about 5. Yeah. Rami doesn't really go outside of that scope. If it's going to fit into one of those 5 lenders, then that's what he's going to stick to. If it goes outside of that, he's really not going to mess with it. So.
Yeah, no, I think that's wise. Great. When you're recruiting folks into the organization, what's kind of the avatar of that? Are these folks that have already been in the space for 5-10 years? How do you go about that recruitment? How do you identify people besides just maybe the volume that they've done recently? And what other attributes go into that to make sure that they're the culture fit and all the rest that you need at West?
We're kind of unique in the fact that I guess I think we're unique. Up until about 7-8 months ago, we had no recruiting whatsoever. So we organically grew to about 700 loan officers with no recruiter. I don't even think we had a landing page where you could fill out your information to capture that, that you were interested in working at West Capital Lending. So what I think is cool about it, it was all organic. It was all word of mouth. And a lot of it was primarily based in Orange County, California. And so, Orange County is a very unique place, right? We're kind of like a, mini finance mortgage hub of America. And everyone knows everyone. And so my background, I was at Loan Depot. I was vice president of sales. And so I had about 240 people on my sales floor. And, once I left, I started originating, and I hadn't originated loans in 8 years. And so once I started to fund 30, 40 loans a month, the word was out that, Danny was onto something, and that being a broker. And so it really wasn't, a huge thing in most of the big mortgage companies were consumer direct, retail, and it just organically kind of grew and grew. And so I've been lucky enough to that fact that people kind of know who I am, what I'm about, that our process is a proven process, and that we care about people, we care about the culture. We want to create a great company that supports them and gives them a good opportunity. And, the majority of the commission goes to the loan officer. We're not, high margin business. So it gives them a great opportunity. And I just think that that's organically spread. And that's the type of people that we're looking for is, I would say, typically 5+ years of experience, been in a consumer direct type of background, know how to be able to do high units, high transactions, help out clients, have the work ethic, and have a, you know, have a share the wealth mentality. Might sound weird, but like,
No, it's great.
just help out the next guy, like
Yeah.
you came in and you learned from me or Eric or, one of our leaders, they taught and trained you everything they did, like pass that forward, right, to the next person. I think that that's helped us create a dynamic culture where people really care about each other and that we're all like independent, but we all want each other to succeed. And I think that that's helped fuel the growth of the company.
That's a great story. And I think, I mean, and you're demonstrating that continually now as you talked about the data you're pulling and the playbooks and the way you're aggregating it and helping to shine a light on what's working so that people can all elevate, as a result. I mean, that's awesome. It tells me that you're not just talking the talk, but you're really walking the walk and relative to the culture. And so it's not surprising that everything's word of mouth and people are coming to you versus you having to seek them out. That's really cool. Daniel, as you developed the organization, I'm sure that there were inflection points when growth kind of tapered for a second before it continued up. What were the major learnings you had about kind of those business inflection points, and how would you recommend, or what tips would you give people that are in the process of building and growing their own businesses to avoid those little stalls? Like, what were some of the key ones for you?
Well, I'll share something personal, but when I got in the business in '03 and had a good couple years, right? Once the market turned and we went through the financial crisis in 2008, I lost everything, right? I lost my house. I lost, just it was a mess, right? And so it really taught me early on that you got to, understand that this business is cyclical, that you're going to have highs and lows. You're going to have these inflection points. You need to, if you're 100% commission-based salesperson, you need to live below your means. You need to consistently have that work ethic and hustle. There's no top of the mountain. If you think that, you've achieved this milestone and I'm set and I'm good, and, everything can get taken away from you like that. And so I have that mentality, regardless of we're 1,000 loan officers, we're doing 3,000 loans a month. I have that mentality like I could lose everything tomorrow, right? And I got to figure out how to just keep that going. And so I try to instill that and share that, even for the people that are winning in the biggest way. I just remind them, right? Like, keep going, keep pushing, right? You're going to have these down periods, right, where nothing is working. You can't convert a thing. You're going to go through those tough periods in life and business. And I just think it's important to have that right mentality on that you got to consistently work through any of those challenging times to be able to get over and get through it. And sometimes it's hard, So yeah, like to your original comment, we ran through some tough times a couple years ago. It was really challenging, right? We were losing money, even in a low margin business, but we doubled and tripled down and continue to reinvest in the business. We didn't do any layoffs. We didn't do any pay cuts. We didn't do anything. We just subsidized that, and we're able to kind of get through it.
Where does that resilience and commitment come from for you? Like, where do you draw from that? Because, I mean, that's tough. I mean, you lose your house or you're losing money and having to subsidize the business, and you're getting kicked in the teeth, and yet you're coming right back at it the next day with the same level of energy and commitment. Where does that come from for you?
I think experience, just from drawing on that experience from what I went through in the past. And then also, I think, maybe a little bit of it is ingrained in me. My dad's an immigrant. He came here with nothing, and he's extremely successful now. And he's always he's 84 years old right now. And if there's something that breaks, he's not calling the plumber. He's going to fix it himself, right? There's no landscape architect, right? There's, it's, at 80s, he's pulling out the mower and he's going to be doing that. And so I think I've drawn a lot of correlations to seeing what my dad has gone through, and knowing what he's achieved, and kind of just reminding myself that, like, anything great is going to take hard work, right? And that you're going to get kicked in the teeth, right? And just being in general, being an entrepreneur, right? You got to fight for your life every single day. So that's always been my mantra. My mentality is like, just figure it out, push harder.
Pick yourself up and keep going.
That's it.
I like it. Well, awesome, Dan. This is a great place to end. I appreciate the personal and vulnerability to share kind of your personal story there. Thanks so much for talking about the business and sharing what's working. I think there's a lot of great things for people to draw from. If you got value out of this, make sure you hit subscribe and share this with friends and colleagues that can also get some value from this conversation. Danny, thanks again.
Thanks for having me, Mark. Appreciate it.